Morning, guys. You can see time is around 8:48. Let's look into Tuesday's Bitcoin trade analysis. You can see on Monday the market kind of moved exactly in a very sideways manner, clearly signifying there is no momentum, but definitely on Tuesday there was some kind of momentum. I would like to decode this trade, and I have taken some Bitcoin trade as well, so I would like to explain that as well. So before that, let me first put on the VWAP levels, and let's try to daily VWAP level. So you should always look for VWAP level, guys. So because it will help you to show some kind of confluence over here. This is on Monday's VWAP level, and this is whenever you find some narrow VWAP level, guys, or the pivot range. You can see this is a narrow pivot range. You can expect some good momentum, guys. Always keep that in mind. So let's take this out. We are only mainly focused on the pivot levels. That's it, guys. And let's put on weekly VWAP level. This is the pivot level. So this is the VWAP level. We should always look for confluence for weekly VWAP levels. And what we need to do is look for previous price action over here. You can see clearly the market here after this kind of momentum towards the downside, the market shows some bullish momentum where the market failed to make a lower low here. You can see instead the market broke structure towards the upside and made an higher high. You can see clearly the market here broke this level as well as this level as well. And the market came all the way to this swing high as well. And if you consider this swing momentum now, guys, so the common point between this to the common point between this, you can see the market taking support from 50 levels over here. You can see here the market is trading at the 50 levels. So here you can expect some kind of bullish momentum. The last down candle, which broke this structure as well as this structure high, and clearly signifying some sort of bullishness. And you can see rejection of price from daily VWAP. The market came all the way to 200 moving average, and here you can see the 200 moving average broken towards the upside as well as the 50 level. So you could have easily taken long position here, keeping your stop loss just below that candle. And in case if you draw the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move. You can see this is the 100% move, guys, where you could have easily targeted and keeping your stop loss just below that candle itself and targeting all the way towards the high over here. You can see the market came and reached this order block level, but here you can see the market shows some kind of bearishness where the market actually formed a chalk over here. You can see clearly the market broke this low, or you can consider market breaking this low also. And here there was a clear chalk formation, but definitely you could have taken short position after this kind of retracement, guys. So if you consider the common point between this to the common point between this, you could have drawn the F50 levels, or you can see here the market is facing some sort of rejection at the 0.38 level over here. This is the 0.38 level, or you could have marked the 50 level also, where the market might face some sort of rejection from 50 levels and continue price towards the downside. So this kind of impulsive momentum towards the downside, where the market here showed some kind of fair value gap, and the market kind of rejected from 0.38 level, and again the market came all the way to this fair value gap base. So if you mark this fair value gap here, you can consider, so you could have expected some kind of rejection from this fair value gap, and market would have continued further selling towards the downside. So this is the momentum where you could have expected in case if you could have found some kind of rejection candles over there here at the 50 levels, and the market is closing and closing rejection candles at 50 levels and closing between these ranges, you could have considered short position, keeping your stop loss just above that candle and targeting towards the downside. But you can see when you have waited for reversal, the market here actually broke structure towards the upside as well, clearly indicating market structure shift from bearish to bullish. And you can see how the market here behaved. And after this kind of momentum, you could have waited for retracement. So you can see market is targeting here both sellers as well as buyers as well. So the people who might have bought here, seeing this kind of bullish momentum, you can see you could have easily taken long position once if this 50 level broke towards the upside and the market is closing above this range. So you could have easily taken a long position, keeping your stop loss just below that candle, and you could have targeted towards the upside. The first target would have been this target over here, and the second target would definitely be this over here. And this is where you could have targeted guys all the way to this level. So this is just a short scalp, but this definitely does not follow the price action over here. But what we need to see here is that you can see this kind of consolidation where the market sentiment is not bullish, guys. You can see there is no fair value gaps, no imbalance, nothing over here, clearly indicating that the market might definitely reverse from here. But again, the market reversed here, but again, the target market targeted all those buyers who might have sellers who might have entered here. And the market here also formed a chalk, guys. You can see clearly indicating bearishness. So in case if you might have drawn this swing over here, the swing high to swing low, you can see the market actually broke towards the upside and the market is rejecting price from lower levels. And you can see it's kind of bullish momentum after this 50 level has been broken. So in case if you might have taken short position, guys, you should always wait for neckline breakout. So in case if you find rejection over here and the market forming another bearish candle like this, once if this neckline has been broken towards the downside, only then you could have taken short position, keeping your stop loss just above that candle itself, the candle which broke the neckline level. So that's how you trade, guys. You can see here there is another chalk formation. But again, the market took support from this 350 levels over here and broke structure towards the upside. But this bullish sentiment is not strong enough because you can see there is no fair value gaps here. Again, the market came, rejected price from this 50 levels, and you can see market closing above the pivot levels. This is the middle of the pivot level, clearly indicating some sort of rejection of price from these levels, and there is some sort of demand over here. And clearly, you can see after this, the market targeted all those sellers who might have entered here as well with this kind of impulsive momentum. And if you look into a daily time frame analysis, guys, and you can see why that market level there faced some sort of rejection and came towards the downside. And if you consider this swing high over here, what I have told you in your previous video is that after this swing high, guys, the market rejected price from these levels and made a swing low here. And you can see rejection of price from these levels as well as the 200 moving average and closed below between this range. So what I have told you in my previous video is the next target would be this candle over here. This would be the next target, the low of this candle. You can see clearly the market came all the way to the low of this candle. And again, the market is trying to take some sort of support. So this was the target which I have already mentioned to you. But I expected that the market would not make a swing high here, rejecting price all the way above these levels and continue further selling. But let's look into consideration and see how the market here, the price action over here behave, guys. Let's see if you try to mark over here and see how the price action over here behave. So let's look into a 5-minute time frame and see. You can see clearly, guys, the market here swept this liquidity over here. This is the swing high over here, and the market swept this high over here. Let's take this out. You can see the market swept this high and immediately followed by reversal candle, and the market formed a chalk over here. And definitely, whenever you find some kind of liquidity like this, you can see clearly the market actually formed a chalk over here, changing the market sentiment here from being bullish to bearish. And this is on the Tuesday, guys, but definitely here, so what you can see here, this was on Tuesday trade, but let's consider on Monday trade and see the market failed to make an higher high, but definitely the market swept this high above this high, guys, liquidity above this high, and the market immediately reversed towards the downside. And the market actually here also broke structure towards the downside, forming a chalk over here. You can see the market actually formed a chalk over here. And the market has left out some kind of fair value gap here, as well as some kind of imbalance. So you could have expected the market to reverse. And in case if the market sentiment would have been bearish after this kind of huge reversal candle, the market would have reversed to 50 levels or the 200 moving average here or the VWAP level and continue further selling towards the downside. But definitely you can see the market here broke the 200 moving average, the VWAP level, day VWAP level towards the upside, clearly signifying some sort of bullishness. And the market even closed above this level high, guys. You can see the previous consolidation. You can forming a chalk towards the upside. This momentum was not strong enough. Again, the market consolidated and again the market broke structure towards the downside. And you can consider this momentum which actually broke structure towards the downside. But in case if you consider this whole momentum as one single swing, guys, and if you try to plot the high to low of this candle, you can see the 50 levels being broken towards the upside, clearly indicating some sort of bullishness only. But in case if you had expected the market came to mitigate this order block, the fair value gap over here, you can see the market here came and mitigated this fair value gap. So what we need to do is to plot the anchor gap level here and see in case if the market is trying to take any support over here. So if you consider this swing structure over here, the common point between this to the common point between this, you should always mark the 50 levels over here. You can see this is the 50 levels and see in case if the market is trying to take support from at these levels. And here you can see there is another order block level. You can see it's a large down candle, which actually broke structure towards the upside. You can see with kind of imbalance as well. So this is an internal order block as well. You can see this is the order block level as well. So you can consider this to be a 5 minute order block level. And you can see how the market came here. You can see there was no bullish momentum, guys, but definitely there is some kind of fair value gap here. But in case if the market sentiment would have been bearish now, guys, after price rejecting these levels over here and the market breaking this low as well, continuing price towards the downside, but you can see there's no imbalance over here. Definitely, in case if you could have found some kind of imbalance over here or fair value gap, you could have looked for long setup, short setups, but definitely you can see there is only a fair value gap here. This is the internal fair value gap, guys. Definitely what we need to see is the market coming all the way from swing high, breaking this swing low, or any of those structures you could have seen. But if you consider this order block level, which actually broke structure, you can see the market here broke towards the upside, mitigating this order block level as well. But in case if you could have taken the trade over here, guys, and if you try to mark the swing high also here, you can see here there is a lot of confluence over here where the market here broke this order block level as well. And if you consider this order block level, which broke the structure towards the upside, but definitely you can see here this swing structure which broke this order block. You can consider this order block level here with a fair value gap or kind of imbalance over here. Let's try to take this out, guys. This was on next day, guys. This was on Tuesday, April. So if you consider this momentum, guys, where the market broke the structure with imbalance, you can see there was a fair value gap here. The market came and mitigated this fair value gap. Again, the market broke this structure high, clearly indicating some sort of bullishness. So what you could have done is to mark the swing low to this swing high and see in case if the market is trying to take support at 550 levels. You can see at this level, guys, where the market came all the way to 200 moving average over here. This is the 550 levels, where the market came all the way to this is the fair value gap over here. You could have taken long position here itself, guys, in case if you might have been a very good analyst on how the market behaves. So, or definitely if you might not have taken and based on price action, you can see after this kind of bullish momentum, there is an order block level, there's a 50 levels over here, and the market broke structure towards the upside. You can see a clear break of structure, or you can consider this to be a chalk formation or the market structure shift. And the market again came all the way to these levels, the fair value gap, mitigated this fair value gap, failed to make a lower low. Instead, the market broke structure towards the upside, breaking the structure towards the upside. Again, the market retraced here, rejected price from the daily central pivot range. This is the pivot levels, guys, and rejection of price from 200 moving average. And you can see this is the 550 levels. So the market came and rejected price from these levels. You can see after this, the market showing some kind of bullish momentum. So if you consider this swing structure over here, the low to high of this candle, once if this 50 levels or the 0.5 levels will be broken towards the upside, you can see this is the 0.5 levels, guys, where the market of this swing structure, in case if the market would have rejected price and continue further selling towards the downside, you can see this momentum you wouldn't have expected, and you can see this kind of huge bullish momentum where that market actually broke structure towards the upside as well. You can see this is another break of structure. You can see there is an initial chalk formation. Market mitigated this fair value gap, broke structure towards the upside. Again, the market came all the way and rejected price from this 200 moving average as well as a daily pivot level, as well as a 50 level. Again, broke structure towards the upside. So in case if you might have failed to take your trade even here, guys, you could have plotted the fib, the fib levels here, the high to low of this candle. You can see again the market rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting. So you could have taken position here also. Seeing this kind of structure break, you can see clearly the market again broke structure towards the upside, clearly indicating another break of structure. And what you could have done is to mark the fifth wave levels over here, the common point within this to the common point within this. Again, the market mitigated this order block levels over here and continuation of price towards the upside. So one entry was at this entry, guys, over here, where you could have seen that market mitigating this fair value gap. So you could have easily entered here. Another was a perfect entry over here, guys. This was, I think, one of the best entries where you could have taken, keeping your stop loss just below this 200 moving average. And for target levels, definitely you could have um, looked for the first chalk formation and trying to plot the fib extinction levels. You can see this is the first chalk formation. So the common point between this to the common point between this to the common point between this. So the 1.68 level, or you could have targeted all the way to 2.6 level over here. You can see this is the 2.6 level where you could have targeted this. or as long as the market is moving above the 9 as well as the 21 moving average is where you could have easily targeted. But here you can see the market again went all the way. If you consider the midway between the 0.38 level, you can see the market also reached all the way to this level. Or what you could have considered is a swing high, guys. You can see this was a swing high, so you could have considered a swing high. So in case you could have expected some kind of rejection from that levels and the price continuing towards the downside, or you could have tried your stop loss all the way below this candle itself. And you can see again the market here showed some kind of demand over here. Again, the market broke structure towards the upside. Again, the market retraced here. You can see some kind of rounding bottom pattern. So clearly indicating some sort of bullishness. But if you consider this swing structure over here, guys, and look at this kind of impulsive momentum towards the downside, you can't expect this momentum as a very strong impulsive momentum, guys. If you consider this is a very strong impulsive momentum, but definitely you can see the market broke this structure low, but when you consider this kind of momentum, it is not strong enough. So you could have expected the market to mitigate. When compared to this momentum, guys, you can see this momentum was very strong and rejected price from this swing high and even broke structure towards the downside, clearly changing the market sentiment from being bullish to bearish. So if you consider the common point between this to the common point between this, you can see the market came and mitigated the 50 levels over here. This is the 50 levels, guys. So this is where the market rejected price and continue. And market again broke structure towards the downside. You can see the market here also broke structure. This is a break of structure. And if you consider this swing momentum over here, the common point between this to the common point between this, again, you can see the market again broke structure and rejected price from 50 levels over here. This is the 550 levels where the market rejected price from this 550 levels and price continuing towards the downside. And in case if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move or the 1.68 level, or you can see you could have targeted it all the way towards this swing low, which I have already mentioned to you. Yesterday's low is where you could have targeted, guys. See the market K. Or if you try to plot the Fib extinction levels of the first chalk formation. So definitely you should always plot the first chalk formation. So let's see in case this levels over here. This is the initial change of character, guys. So the common point between this to the common point between this. You can see this is the 50 levels. You could have targeted the 100% move, the 1.68 move, or you could have targeted it all the way to 2.6 level over here. You can see, guys, the market came all the way to 2.6 level. This is where I have taken my trade, guys. This momentum, and I have made around $47,000 of profit. And you can see the market rejected from 200 moving average, where the market here showed some support here, but again the market showed some kind of resistance over here, and here the market was not able to cross the 21 moving average as well as the weekly VWAP level. And if you try to plot the daily VWAP level over here, so if you consider this is the daily VWAP level, and see, you can see the market here showing some kind of demand and showing some sort of support here. But definitely with this momentum, the market even broke this VWAP level as well as the 200 moving average as well as the weekly VWAP level as well. And again, the market retraced, but this retracement is not very bullish when compared to this kind of impulsive momentum towards the downside. So you could have expected price to reject from these levels and continue further selling towards the downside. So you could have just entered your position here, guys, keeping your stop loss just above that candle, and you could have targeted it all the way towards the downside. This is the trades which I have captured it, guys. So I exactly took it around this position itself and I holded it all the way to around, I think this level somewhere here, guys. And at around 140 to 150, this is where somewhere I exited. But you can see again the market showed some kind of reversal here. And it reached all the way to 2.61 level. This is the trade setup, guys, where you could have taken. This was another bullish trade setup where you could have taken, where price is trading above the 9, as well as the 21 moving average, above the 200 moving averages, as well as the daily VWAP level. So I hope you're understanding, guys. In case if you might have missed out on this trade, you could see the market sweeping the all-time high, not all-time high, the swing high, guys, over here, and immediately forming a chalk formation. When you find such kind of reversals, you should always take short position. And you can see this kind of huge impulsive candles towards the downside, clearly signifying the market sentiment being bearish. So that's where you could have taken short position at the 50 levels, or after the confirmation of break of structure towards the downside, you could have waited for retracement as well, clearly indicating the market sentiment is bearish. You can see this kind of momentum over here. There is no fair value gaps or imbalance, and the market rejecting. And if you could have traded at this position when you could have seen the neckline being broken towards the downside or the 550 levels, the common point in this. Once if this 550 level being broken, this is where you could have taken short position. You can see. taking short. This is exactly where I have taken this, and you can see again the market broke again, retraced to these levels, rejected price from these levels, and continue further selling towards the downside. So I hope you're understanding what I'm saying, guys. You can see this kind of support which I've already mentioned to you. That's it about Bitcoin trade analysis, guys. I hope you're understanding what I'm saying. Uh, in case if you find my videos helpful, guys, please like, share, and comment. Um, please leave a comment below. I would love to read your comments, guys, and please keep supporting our YouTube channel. It would help my YouTube algorithms to grow and reach more people. And if you want to message me, guys, if you want to keep in contact with me, you can message me directly my Instagram handle, which I have handed it over there in my profile. So you can go and message me directly. I would be glad to hear from you. Thank you, guys.